The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. Here are your headlines today. The S&P 500 breaks a three-day winning streak, while the Nasdaq posts its worst day of May as higher Treasury yields weigh on Wall Street. Salesforce shares are set for their worst days since the 2008 financial crisis, with the cloud software vendor posting its first revenue miss in 18 years. CEO Marc Benioff tells CNBC he's focused on the fundamentals.
You can't always control the buying environment, but what you can control is your cash flow and your margin. And you can see the incredible growth this quarter is amazing. I mean, these are cash flow numbers that we've just never seen before.
Nestlé CEO MarK Schneider dismisses fears that weight loss drugs could damage the food and drink industry in an exclusive interview with CNBC.
Nutritional needs don't go away. They're just shifting. So, before, during, after GLP-1 therapy, consumers still have nutritional needs, but they may be different from someone who's not on a weight loss regimen.
An activist investor, Nelson Peltz, reportedly sells his entire stake in Disney weeks after losing his bid to gain 2 seats on the House of Mouse's board. Not much by way of color, right? All you're seeing is pretty much red across the board then, and it's really just negativity that has seeped in, perhaps a little bit away from the earnings picture, despite coming through onto some earnings news, of course, that has come through Salesforce, which we'll unpack in just a bit. But it seems as though it's a lot more beholden than to Fed speak. Perhaps the market even being held hostage then by Fed speak as well. What happens when it comes to that? When it happens when it get to inflation data, the PCE numbers, of course, anticipated out tomorrow. It's like nuances on that data as well, 0.3 and 0.2%. How vast a difference could those be? It's not just one data point, but really a series of data points that have certainly been choppy. And perhaps a lot of that is really coming through into this market picture. And that's why you're seeing a little bit of divergence, a little bit of volatility. Look, you're seeing red across the board here. And the Dow Jones Industrial losing more than 1%, even 0.5% down for the Nasdaq, despite Nvidia managing to inch up close to 1%. But actually, for the whole month of May, you're still seeing gains, 4.5% higher, in fact, for the S&P 500. The Nasdaq is 8% higher as well. The Dow Jones, though, is the one that you might want to worry about, but it's still also up 1.65% on the month. So still some gains coming through on that front. As we head towards the market open, you're also seeing negativity, though, as we head towards the closeout of this week, as well then as the month. I spoke about Salesforce. Well, numbers coming out of Salesforce just yesterday weren't really helpful to the entire picture, right? That company had a revenue miss, the first revenue miss since 2006. It's 18 years since it last did that. So that share price fell 16% in trade yesterday. It also had what was its first ever single-digit sales growth outlook. So the outlook's still not looking good as well. We'll unpack that a little bit, because that means that cloud might be getting a little bit shaky. Is that the case? I mean, we've seen some of the other cloud companies as well faring a little bit better. This is what you're seeing then in after-hours trade, more than 16% down as well for Salesforce. So that negativity seems to just been continuing. Onto the Asian market then. We saw losses yesterday, saw losses the previous day. Just seems like those losses are continuing. So negativity still at play then overall in this market picture. We do have data still anticipated out of the Asia region, plus of course the PCE numbers, and Europe has inflation numbers too. But Japan and South Korea will be releasing industrial production numbers. That comes out on Friday. China will release official PMI data. That's anticipated for the month of May. Inflation data for Japan's capital city, Tokyo, also said to be on deck as well. So all of that will still be in keen focus. The Nikkei as well as the Hang Seng then 1.2% down for both of those. So significant losses on that front. On Australia's index also down around 0.5%. Onto the treasuries here then. We're seeing a pickup when it comes to these treasury yields. a lot of it is on the back then of what has been weak demand out of the Treasury auctions that we have seen of late then, whether it be the 7-year yesterday, the 2 and 5 year auction the day before that. So a lot of weakness in there has actually meant supply clearly is on the rise then. There's too much supply ultimately in this market picture. You're seeing those yields then 4.6% for the 10-year note. Still, just below 5% though is where we are on that 2-year note, a significant mark that you look at then when it comes to this trade overall. So that's the picture across these markets right now. Of course, unpacking all of that across the show, Karen.
And let's pick up on that conversation with Robert Dishner, who joins us now, portfolio manager on multi-sector fixed income team at Neuberger Berman. Robert, it feels as though the market is waiting it out for some fresh data. We've had a number of Fed speakers before the blackout period later this week. What do you make of what we're hearing and whether there is potential to get to 1 to 2 rate cuts this year?
Look, the Fed still would like to cut rates this year, and they want to keep that option on the table. What they're really sort of trying to eliminate, to the extent they can, is the unlikely event of a hike, right? They want to reduce that probability, right? Because, the longer this goes on, and we're already seeing some stress in some of the credit card delinquencies and those type of things, the Fed would, if they could, like to cut rates at some point later in this year.
How pivotal is it to have a 5% handle at the short end? We were there earlier this year. Does it matter? Does it change sentiment in the markets?
It does, because the longer you stay at these levels, the more stress, again, is appearing. We're seeing that, again, we had the credit card delinquencies out last week or the week before. We're seeing this, some increase. For example, people are tapping home equity lines. Again, these are small changes on the margin, but again, it's sort of showing some of that stress is appearing in certain parts of the market. Obviously, some of the earnings we had before, whether it was McDonald's or some of these things talking about pressures, people are starting to feel the pinch.
Weak treasury demand has also been seen just over the last couple of days as well. Is that symptomatic or the catalyst for the spike we've seen in these yields?
For sure. I mean, it's a lot of that. I mean, I think there was like 200 plus billion this week that Treasury issued, and someone, we had the conversation why is Treasury issuing when not a lot of people are in? We were just talking, there's not a lot of news out, and because they have to, right? The government's got to fund itself, and so we are seeing some of that tepid demand for Treasuries. Yeah. So
does that March go a little bit higher from here? You think? I mean, 4.6 on the 10. Just 5% and maybe a little bit above then for that lower handle?
Look, certainly things are, we peaked out, at 5% 10s in October, 5.25 or so on 2s. It seems a bit unlikely we're going to get to those levels because, again, we're talking about rate cuts, not necessarily about rate hikes, which we're probably still on the table. So, probably in more of a range here, but obviously it doesn't feel great in rates markets right now. For that. But again, we do like the short end of rate markets here.
I want to just pick up on your point around some of the stress that is being felt by consumers given tighter interest rates for longer. And we were talking to Neil Kashkari earlier in the week, and he was still looking at the interplay of different data points in the economy, that you've still got spending, that you've got the spending that's taking place on Main Street. You've also got the mortgage side. The housing market's still somewhat resilient despite the higher interest rates. What do you make of those anomalies that we're still seeing despite the higher interest rate?
Sure. So a few things there. One of which is, we are seeing, for example, some new listings are coming out, some inventories are growing, particularly in some condos. Consumers are feeling the pressure, right? It's car insurance, it's homeowners insurance, it's a lot of things that are sort of pressuring that wallet. And again, it's these things on the margin, but again, we are seeing some of that we weren't seeing 6 months or a year ago. And just on the mortgage side, things are, the housing's stable-ish, but again, you don't want to extend this too far and then really get some pressure.
Let's segue over to the ECB, because it is the big next stop as we talk about central banks, and they are expected to cut interest rates. What do you make of what happens with the first cut, whether we're done and dusted now because we haven't had any other extraordinary event to steer us off course, but also the potential for a follow-up in July?
So, the ECB is going to cut next week, obviously. Unlikely they're going to go again in July unless something extraordinary happens on inflation where we get a much lower print. But the market probably is underpriced for the ECB for this year. We even had Robert Holtzman, who's a very big hawk, talking about 2 cuts this year, possibility third. The market's barely over two cuts for this year. And even worse, I think they only got 2 to 3 next year.
See, I don't get the point around why there's no follow-up in July. When I spoke to half of the Governing Council about a month or so ago, it felt as though there was a big question mark. And for those that were worried about the slowdown in growth, it doesn't feel as though one 25 basis point move is actually going to make any difference to their growth profile. So if we're going to cut once, why not cut twice in short time?
Look, that's what they should do, but that's probably what they're not going to do, right? Because you do have some of the hawkish members on the committee probably against that. But again, that's probably from an economics perspective what they should do is that follow that up with a 25. I mean, that leads into like the Bank of England, right? The Bank of England can't cut in June because of the election. So what does that mean for August, right? And so the Bank of England probably cuts, in August as well. So it's all this interplay. I don't think the ECB wants to get too far ahead of other central banks. But again, what they should do, and totally agree with your point, that they should go again.
Yeah, I was actually about to ask on that point, just the divergence with the rest of particularly just the Fed then. If you do have the ECB then cutting twice, maybe even 3 times for whatever reason, and you're far divergent from what you have out of the Fed, what does that then actually do to the yields actually as well, particularly in Europe?
Well, that's a great question, because the concern then is you get a weaker euro and you get higher inflation, right? So you'd be importing inflation into the euro area. So they're not going to get they can diverge, they just can't diverge by, a ton. So is that 100 basis points? Is that 50 basis points? And that's what the market's grappling with right now. And so, but to your point, the growth in the euro area is fairly pedestrian.
Yeah. How significant is tomorrow's PCE number?
Big.
Yeah.
So if you think about it, median forecasts are for 0.3. About half are at 0.3, half are at 0.2. If we printed 0.2, that's in core PCE. If we print 0.2, we could get a relief rally in U.S. Treasuries. If it's 0.3, depending upon how it is, and the markets, like they're selling off on very weird numbers, import price index and those type of things. So the difference between a 0.27 and a 0.33 on that number could have implications for rates, even though it's a 0.3 on the month over month.
Are sensitivities, or is the market just become vastly more sensitive now to all of this data because of, I suppose, what's at stake?
100%. The market's reacting. We reacted to a conference board number. I mean, the fact that we reacted to import price index, I've been doing this for, almost 30 years now, right? So I've not seen a 5-10 basis point move on import price index.
Yeah. I mean, data always matters, but it was never one piece of data in one particular month, and not even the non-top tier data, right?
Exactly.
Yeah. Robert, thank you very much for joining us. We do appreciate your clarity on markets. Robert Dishner with us, portfolio manager on multi-sector fixed income team at Neuberger Berman. Let's talk about inflation. German inflation came in hotter than expected for May, rising 2.8% on the year compared to 2.4% in April. But analysts played down a wider risk of rising prices, pinning this month's jump on the end of a cheap national rail ticket scheme introduced last year. The figure is also not expected to affect the ECB's plans to cut rates next week. We're going to get more inflation data before that, though, with the Spanish print due out this morning and the wider Eurozone tomorrow. The Cleveland Fed has appointed Goldman Sachs veteran Beth Hammack as its new president. She will replace the outgoing chief Loretta Mester when she steps down next month after a decade in the post. Hammack most recently served as Goldman's co-head of global financing. UBS is overhauling its management board, with Ulrich Körner, the last CEO of Credit Suisse, before its takeover due to retire from the banking giant. Other notable moves will see Iqbal Khan become president of the Asia Pacific business, while also staying on as co-president of Global Wealth Management arm. Now, Damien Vogel has been named UBS's chief risk officer. Big changes coming out just before we started the show this morning. Really interesting, I think, when we look at Iqbal Khan, a name many of us know on the markets, given previous life at Credit Suisse as well. But effectively, he was talking about the opportunities with the Asian clients recently, saying that now that you've got a bigger bank, perceived as stronger for some of the Asian clients, and he's saying after a meeting that he'd had in recent months, one of the clients had transferred more than $400 million back to the bank. So no doubt that commentary, that particular decision by a client having some bearing on this beefed up role for him in the Asia Pacific region.
So interesting, actually. We'll see how that continues to work out as well. Let's Talking about what's coming up then on the show, the votes are in. Now the count begins in what promises to be South Africa's most fiercely contested election since the end of apartheid. A live update from Johannesburg that comes up after the break. Plus, Nestlé CEO MarK Schneider dismissing fears that weight loss drugs could damage the food and drink industry. We'll bring you some of Sylvia's exclusive interview with the CEO. That's at 7:30 CET. And don't miss our interview with Auto Trader CEO Nathan Coe as the firm posts earnings this morning. That's coming up at 8:30 CET.
Listen to CNBC's Beyond the Valley, the podcast that explores the biggest tech news from across the globe. Join me, Arjun Karpal.
And me, Tom Chitty, every week as we bring you insights into the top stories, unpack the latest trends, and find out where the industry is headed.
Now available on Spotify, Apple Music, and Google Podcasts.
Well, counting is underway in what is said to be South Africa's most fiercely contested election since the end of apartheid, as the ruling African National Congress fights to maintain its parliamentary majority. Let's head on over to Johannesburg now. With CNBC Africa's Godfrey Mutizwa joining us then. Godfrey, voting closed yesterday, but the queues were still very lengthy post 9 o'clock.
Absolutely, Arabile. Yeah, so the big story stemming out of these elections was the voter turnout. It appears like it surprised even the officials. So what we saw last night were very long queues in some urban centers. Whether you're speaking about Johannesburg or you're speaking about Durban or indeed Cape Town, there were some very long queues. Now, the officials are giving various explanations as to what the cause could be. The suggestion has been in some places there were issues with the ballot boxes and also with the voting machines, and then in other places it was because people had started voting later, and so naturally there were more people who were still in the queues late last night. But the story still appears to be, Arabile, that this vote has proceeded smoothly, as indeed have the other 6 elections that South Africa has held. Now the counting has already started, but I don't know if you want these numbers, because really we are really right at the beginning. It's less than 1% that's been counted so far. In fact, 0.94%, let's be precise. And it's 218 of the 23,293 voting districts that have counted their votes so far. And the picture, interesting, but big, of course, bat on that one is the fact that these numbers are still low, very low numbers. So the ANC, out of those 218 districts that have been voted for, 53.68%. They would love that number to be the final number at the end of the vote count. The Democratic Alliance, 20.26%. The Economic Freedom Fighters, 7.79%. But very important to state, these are early doors, Arabide.
Yeah, Godfrey, certainly an interesting prospect then to just see where the election currently sits. The kingmakers anticipated to be the MK party, and that seems to be the case right now. We'll continue to get updates with yourselves and the team then throughout this morning. Thank you so much for your reporting then out of Johannesburg.
Let's talk about a major deal, or lack of it, as BHP has walked away from its near £39 billion pursuit of Anglo American after a dramatic 6 weeks that saw it raise its offer price twice, but to no avail. BHP's desire to silo off the firm's platinum and iron ore operations ran into opposition from Anglo's board, who called the plan highly complex and unattractive. Well, BHP made one last push before Wednesday's deadline, requesting an extension and arguing any risk arising from the deal was quantifiable and manageable. BHP now has to wait at least 6 months before it can make another approach, according to UK competition rules. That is unless Anglo receives a rival bid. So what now? Anglo still has to deliver on the radical restructuring plan it announced back on the 14th of May, when it said it will look to divest or demerge its steelmaking, nickel, platinum and diamond businesses. That plan has secured the backing of investors like LGIM, but has drawn the concern of labour groups in South Africa. Both stocks in the red after Wednesday's announcement, as you can see on the boards there.
Well, Karen, let's have this conversation then a little bit more, right? Marina Calero is the Senior Equity Research Associate then for Metals and Mining at RBC Capital Markets. Marina, thank you so much for the time. Appreciate it. Let's talk about whether you were surprised at the fact, you've got this deal now being scuppered. It looked like they were going to just continue conversations for some time, even with the backing then of the likes of BlackRock. That didn't happen. That didn't work. Were you surprised?
Yeah, certainly. We were expecting Anglo to extend the deadlines a bit further, given the complexity of the deal, to allow for engagement with different stakeholders. So yeah, very much surprised. We were of the view that the likelihood of a deal to go ahead was very low, just given the difference that both parties have on the structure. But yeah, we're expecting more of an extension from Anglo.
But did this open up the opportunity maybe from here for somebody else to come in? Maybe not BHP, although BHP did look like the best possible option, I suppose some would say. Does this open the deal up for some of the other players in this space to have a look under Anglo American's hood?
Yeah, definitely. I mean, given the size of the deal, there are not that many potential companies that could make a competing bid. We see Glencore as probably the most suitable candidate. They also have assets in South America and in Australia, so there could be synergies there. And also they have a trading division that could unlock some value in an eventual combination. However, currently they are tied up. They are working on the approvals of the tech deal that was announced last year. So it's unlikely that they will get involved until that's completed, which is expected towards Q3, Q4 this year.
The pricing and the structure of the deal, I think, is fascinating, because if any other suitor were to come out of the woodworks, it would seem as though the pricing would need to still make sense. So if BHP was still finding at this point that they didn't want to overpay, so they didn't want to put more money on the table, that means there is a price restructure equation, right? So just talk through the pricing of what was offered and whether that was fair value when it comes to Anglo's assets.
Yeah, so I think the latest offer priced Anglo at roughly £31 per share. That's pretty much in line with our price target for the company, considering the restructuring they have announced. The issue is that divesting Kumba and Amplats ahead of the transaction could probably trigger additional cost. So an eventual deal will have to take place at a higher price to compensate for those execution risk.
Can I ask you about the motivation for another player to be flushed out now and enter into some sort of a deal making? Because BHP, very much a business with expertise on transactions, the biggest company in the space, if it can't get a deal through, doesn't it just attach warning signals for other potential suitors? I mean, I do wonder whether anyone lobs an offer here and whether the deal process would be that you allow Anglo shareholders to get a little bit angry now that they didn't get a deal, and that there's a lot of execution risk still on demergers that they have to then see through the business. So wouldn't you just wait it out if you were a potential suitor as well?
I think the deal was all about copper, and when you remove the rest of the portfolio, I think there could be a lot of interested parties in getting exposure to that portfolio that Anglo American has. I think the key here would be whether a potential competitor will be able to take on the South African subsidiaries. That's why we see Glencore potentially, they already have operations in the country, so they are potentially more open to take the risk of bringing those two companies into their own company. I think that will ease the discussions a lot.
In the meantime, Anglo American needs to kind of prove that its own strategy is then going to work for it, right? What have you made of its strategy to divest and change itself so that it actually looks good? I mean, this is a review that they had been taking before this deal even came about.
Yeah, I think the bid basically accelerated those plans. They were already in the making. I think the plan that Anglo has put forward makes strategic sense. You would see its exposure to copper increasing from 30 to roughly 60% on an NAV basis, and that should allow over time to trigger a re-rating in the multiples that it's trading at. But there's certainly execution risk. So now the pressure is on the management team to deliver those divestments within the time frame that they have.
Can I ask you about BHP just quickly, because you've got sentiment negative, but I know there's been some shareholders that have been responding, thinking it's great that they didn't push ahead with a deal that may not be value accretive, and that suggests that the board does have discipline when it comes to deal making. So how do you feel about BHP now, and what's next for them? Because there's some suggestion they may refocus on some sort of organic growth strategy.
Yeah, I think BHP doesn't have a lot of organic options in copper. I think potentially now, as you mentioned, this shows that the management team is disciplined, which is a good thing. They can now have to walk away for 6 months, so they could as well wait, see how Anglo gets on with its restructuring plan, and potentially, come back in 6 or a month or 1 year time when some of those divestments have been executed, particularly Amplats, which is a subsidiary they don't really want to integrate. If a deal with Anglo cannot be broken, then they could look at other players in the industry or look for more greenfield options as well.
Marina, thank you so much for joining us today. Your first outing too on television, so thank you very much.
Thank you.
Marina Calero with us, Senior Equity Research Associate, Metals and Mining, RBC Capital Markets. One of the largest investors in Royal Mail parent company, International Distribution Services, has implied that Wednesday's firm offer of 370 pence per share from Czech billionaire Daniel Křetínský undervalues the group. Columbia Threadneedle Investments is the firm's 7th largest shareholder, according to LSEG, holding a stake of more than 5%. It says additional equity value can be delivered for long-term shareholders. This after the stock closed more than 4% higher for the day Wednesday, but still substantially below Křetínský's offer price, suggesting investors see a bumpy road ahead for the deal amid a general election in the UK. Interesting, isn't it? Because we're saying there was barely any response, initially at least, from the Labour Party.
Yeah, especially then just government force and just government actually wondering whether they would get involved in this or say anything. And I suppose Labour were just saying that they'll watch it.
Yeah. Can we compare and contrast? We were having a little newsroom discussion about how other services have performed in other countries. And if you do a compare and comparison from Germany to France and beyond, it does also just highlight a story of underperformance.
Yeah, it certainly does.
I'll throw Italy in too, actually. Don't miss out on the Italian Post as well. Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.